Hello and welcome to a special edition of Simply inTAXicating. Taxation has indeed been the flavour of this week so far. First, let me congratulate the Indian Finance Minister, Mr. Arun Jaitley, for successfully piloting the GST Bill in the lower house of the Parliament. Second, the New Delhi was the host for a mega 3-day workshop on a large number of taxation issues, both indirect taxes such as VAT or you call it GST, and international taxation issues such as BEPS, transfer pricing, dispute resolution and sector-specific incentive packages being implemented by various economies in Asia and elsewhere in the world. Yes, I am talking about the Asia Pacific Tax Forum meet organized by the International Tax and Investment Center, widely known as ITIC, headquartered at Washington. The workshop was attended by virtually who is who of the global taxation world. Some of them were former head of the Center for Tax Policy and Administration, OECD, Mr. Jeffrey Owens, former Permanent Secretary of HMRC, Dr. Dave Hunnett, widely acclaimed GST expert and professor from University of Pretoria, Professor Sijbren Cnossen, GST Chief of Malaysia, Mr. Subromaniam Tholasy, and TIOL consulting editors, Mr. DP Gupta and Mr. Sumit Dutt Majumder. To start with, the ITIC President, Mr. Daniel Witt, released a research paper titled ASEAN Excise Tax Reform, a Resource Manual. To bring you the flavour of the event, let us go straight to Taj Hotel in New Delhi, where Mr. Sumit Dutt Majumder and I spoke to the Malaysian GST Chief, who shared the pangs and the pleasure of the new tax system being put in place only about 35 days back from 1st April 2015.
So, sir, you have already gone ahead with the GST already being implemented from 1st April. To start with, how many years did it take for Malaysia to finally start rolling out GST?
We actually started the pilot project way back in 2005. Initially, it's supposed to have taken off in 2007. However, it was postponed, and later it's supposed to take off again in 2011. Again, it was postponed, and finally, we are glad that finally it took off last April. If you ask me personally, we are one of the last few countries in the world to implement GST, which my personal view is we should have implemented long time ago.
But so going by the history of GST, is it necessary that there should be several postponements before finally it is rolled out?
I think the issue here is Malaysia postponed it a couple of times for reasons like the businesses wanted more time to prepare themselves. Okay, that was the reason behind why the government decided to postpone, and it also allowed us to engage the industries, and the consultation process it went on. It did not stop. And one of the success behind the implementation of GST in Malaysia is we work very closely with the industries, and 2 years prior to the implementation, all the guides were completed and uploaded in our portal for the industry to have a look at it, and so that they can, it's a learning process for everyone basically. And I'm very glad that Malaysia has adopted what we call as hand-holding program, basically to educate the businesses.
So most of the things were put in place 2 years in advance for the industry and trade and taxpayers to give you the feedback. And then based on that, the guidance notes which were prepared and uploaded for the public consumption were amended, and finally the most of the rules, supply rules, etc. were finalized, and now it is being rolled out. So there has to be a sufficient gap. So in case of Malaysia, it was 2 years.
Yeah.
Or maybe the industries were approached or provided a platform to interact with the policy makers who were working on the GST, various legislation, rules, procedure, etc. much in advance.
Yeah, that was a path that we took. In fact, even before the bill went to the Parliament, we were actively engaging with industries. And so there were a lot of feedbacks. We as a tax administrator, we do not know the industry well. You see, when you implement GST, it is extremely important for the administrator to understand the industry, especially the industry issues, because it's not like some other taxes. before you could even come up with a treatment, you need to understand the industry, especially like a certain industry, property, what do you call, insurance industry, banking industry, and then we have got this Islamic banking as well, where the treatment could be slightly different. Okay, so it's extremely important for the tax administrator to understand this before you could even come up with some guidelines.
You're right. So in the process of finalizing these things, did you also come across that taxpayers also expressed their concern and you took into account their concern, you addressed them, that it's a new system is going to be better for them. So how did you interact with the taxpayers?
Yeah, as far as the taxpayers are concerned, it's not really an issue in Malaysia. Most of the traders welcome GST. Yeah, but then there are other issues. The taxpayers basically write to customs and they want to know the tax treatment, especially some of the complex issues. So what we have done at our site is, if you look at our portal, right, a lot of information uploaded. But as I mentioned earlier, the industries are, very complex, so there are always new issues that comes up. And then we have a technical committee at our level. Basically, we sit 3 to 4 times a week, and we publish those decisions through our website. It is known as DG's decisions, Director General's decision. Right. So the industry basically can write into us, can approach us, and we will deliberate those issues, and we put it up on our portal so that the industry understand what is the treatment, what are the rules that they need to follow and all that.
Right. So now that, how do you sum up your experience that you have already rolled out on 1st April? So this 34, 35 days experience.
Okay. Frankly speaking, it was a pleasant surprise. We expected the worst. All right. You see, one of the good thing about Malaysian rollout, the success rather, is we have got more than or close to 400,000 traders registered for GST. And out of this, only a handful applied for registration manually. Basically, almost all of them applied electronically. This is one of the benefits of going late into the game. I believe India would be in a similar position as well.
Right.
And even the filing of the return, which has started this month,
right.
Okay, also being filed electronically. That's a great thing. For me, it's a great achievement. Unlike if we had introduced 20 years ago, then you would have seen, many companies filing on a manual basis, right. And to get them shift to electronic filing, right. It is an extremely difficult task. Right. That's why even in developed countries, if you look at the UK, Australia, there are still some sizable number who still file manually.
Right. Right. Absolutely. So what about the credit systems? How exactly the credit system is working?
It's working fine. It is basically based on self-policing. So the trader themselves would need to declare how much is their output tax and how much is their input tax, and they net it off by themselves. All right. They only need to pay the net tax.
Okay.
If they are in a refund position, then of course they would get their refund within 14 working days from the date of filing.
And that will go straight to their bank account?
It goes straight into the bank account. This is among the information we require when they register for GST.
Right, right. What about the invoices, sir? Are you asking them to upload the invoices and you do some matching?
No. There's no matching of invoices. We promote self-policing. We want self-assessment. Basically, the requirement of the law is for them to issue tax invoices. They will keep it. Our auditors would go and inspect them, later.
So prevention is going to be through audit?
Oh yeah, through audit.
Through audit.
First of all, congratulations for being able to get through to GST in Malaysia, and it's a good news for you. And I hope I as an Indian will get an opportunity soon to be congratulated by you. Because just before meeting you here, you know that both of us were in the session.
Yep.
As soon as I came out of this, we came out of the session, somebody informed us that our Lok Sabha, the lower house, has cleared the GST bill. First of all, in our country, as you know, we have gone in for dual GST. That means both center and the states, or provinces, as you may call it. They will be having, they will be implementing GST concurrently, simultaneously in parallel lines. One is central GST, other is a state GST. Now, in your country, you also have a federal system of provinces. So, is it a dual GST or central GST, or I mean, what's the structure of the GST that you have?
Okay, first of all, on behalf of the Malaysian government, I would like to congratulate Mr. Sumit, the Indian government as well, for having the law passed in the lower house. Hopefully, it will be a smooth sailing in India as well. And coming back to the Malaysian states, yes, ours is basically a federal GST, except for two states in the East Malaysia.
The islands on the other side of the sea.
Yeah, in the island of Borneo, Sabah and Sarawak, they do have a limited sales tax, which is basically imposed on palm oil, as well as on gaming. That will continue to be administered by the states, and that will go to the state coffers.
Okay.
But over and above that, there will be GST on those products as well. So basically, in Malaysia, it's a federal GST, and other states in the Peninsular Malaysia, we don't have issues. Yeah, the only issue is entertainment tax. Entertainment tax, yes, goes to the state, and of course, GST is imposed over and above the entertainment tax as well.
Another point, it is very interesting. In the morning session, you mentioned that your GST rate is somewhere between 7% or 6%. 6%. Because internationally, I've been reading the GST rate is 16 to 20%.
Yeah.
Germany, 23%, because they spend more on the social spending. How did you manage that?
Okay, basically, if you can have a broad base, okay, a lower rate would be justified. But the thing is, if you start giving too much of exemptions and zero rating, then probably...
What's to be the threshold?
Threshold is 500,000 Malaysian ringgit.
In terms of...
in rupees, about the exchange rate is about 1 to 17, 16, 17. That
whatever,
would translate to, yeah, but...
Whatever, yeah, it's
so,
okay.
the question here is, see, one thing good about GST is that even businesses below threshold would want to come in. They will find it even hard to deal
sell
with...
their goods.
Yeah, sell
without the invoice, without the invoice,
yeah.
they will not, others they will not sell.
Yeah, so we have got something like close to about 1/3, businesses, their threshold is much below than 500,000.
There's a good point you made. This good point you made. We have seen, right now in a central excise, the threshold is 1.5 crores, Indian rupees crores. Now, but that means below 1.5 crores, they did not come. They're the small scale sector. Okay. So SSI, we call it, small scale industries. But then we found the big chunk of those who are below 1.5, they also want to, they're paying central excise duty. The reason is, philosophically saying, even a small person doesn't want to remain small for all the time. Exactly. You'd like to become big. And for being big, he has to sell it to the bigger people. And they will not sell your goods unless you just invoice and credit they get. Yeah. So this is a very good point that you have taken this into consideration. Somehow, I think that point is not there in our this thing, because they're still clamoring some sections of the small scale because they're talking about 25 lakhs is the 25 lakhs of rupees at the threshold. But the state said no, it should be 10 lakhs, and then even that was found. Anyway, that besides the point. Another important thing, sorry, I'm going a bit quickly, because you are also busy, you have to go for another session now. Another important thing I wanted to ask, how are you tackling this food and processed food? Because this is a very touchy issue. If I recall, I was told by an Australian that when VAT was introduced in Australia, they had included bread into the VAT, within the ambit of VAT. VAT or GST is the same thing.
Right. Yeah, it's
two
the same
sides of the same coin, but it's a more favored name these days. So, I believe there was protests and all over the country when the VAT was in there. So here also food and food items are touchy. And that's why there's a lot of exemptions on the central excise side on food and even processed food. Although VAT, they have not exempted. Their VAT means state VAT I'm talking about. The sales tax, they collected this. So there is a lot of talk. And the food processing industry, they're saying that the GST rate will definitely be more than what they're paying now. So how are you doing with that, dealing with that?
Okay, in Malaysia, basically, we zero-rated basic food stuff.
Okay.
Yeah, those unprocessed food.
Right.
Yeah,
that means they get the refund of the inputs also.
Yeah, they get it. And this is, if you look at the consumption pattern, you know, the low-income people basically consume the most of their income on basic food.
Sure.
So we zero-rated that. The only exception is white bread, plain white bread, which is also zero-rated.
Okay.
So other than that, basically anything that is processed food is standard-rated.
Standard is 6%. And you have only one rate, 6%.
Only one rate, 6%. Yeah.
But you have, sir, an exemption list also, the list of items which
You said there's a minimum.
Yeah, it's only the
items are
basic
there?
food, and then the critical sectors are exempted.
Critical sectors, health insurance maybe,
Yeah,
childcare,
basically, yeah, it is
healthcare, funeral
healthcare,
services,
funeral services, education, public transportation, namely, social needs. The idea is basically to provide, social safety net for the low-income people.
Petroleum is included.
Petroleum, we have got
products.
two categories. The general treatment is taxable because when we implemented the RON 97, which is a higher grade, it is taxed at 6%, and the lower grade is also taxable, but the government has decided to give relief for a certain period. Okay. Sometime in the future, there could be a review on that.
And do you have conceived of something like GST Council or what we are thinking of to just take decision on the different times? What will be if there is a change, something, who will decide, the government or the state government? No,
federal government. It's all decided by the federal government.
Thank you very much, and
my pleasure.
Again, all the best.
All the best to India as well.
Thank you.
So, before we, sir, wind up, my last question to you, sir, any suggestion, any tips for India which you would like to share with the policy makers, the revenue officials, the taxpayers, the business as such, which are a little worried, concerned, what is going to happen?
My personal advice to India, be it the trader, the public or the government, please look at the bigger picture. Do not look at GST in isolation. It's not about taxing goods and services. It's about making the country more competitive, putting the country on a right platform and reducing the shadow economy. And basically, when the central government collects the money, it basically is going to go back to the people, right? So this is where, the general public need to understand the benefit of GST, from a bigger perspective, rather than looking at, from a very narrow point of view, GST is going to tax them, the prices of goods are going to go higher and things like that, okay? And in Malaysia, what we have done is, for the lower category of people, low income people, we have given direct cash assistance to compensate the increase in the tax burden. Okay, that is a way forward. Otherwise it's quite difficult, because usually GST is regressive in nature. So the low-income people will be more affected rather than the compared to the high-income cousins. So in Malaysia, the direct cash assistance is given to those earning below 4,000 ringgit a month. That would be what, times by 16, 17.
Very good takeaway for India to learn this lesson. That is because in India also it will be there. The way they have tackled the poorer sections.
That has been taken care of.
Yeah, that's a very good takeaway from this discussion. And any other questions?
So thank you, sir. It's wonderful.
I just want to, Subro, I had mentioned to you that I've written a book on GST. I'd like to gift it to you for you.
Thank you again. Maybe I'll promote your book.
Let us now go to Professor Sijbren Cnossen. Mr. Cnossen is a professor at the economics faculty of the University of Pretoria, academic partner of CPB Netherlands, and professor of economics at Maastricht University, the Netherlands, and of the tax law at University at Rotterdam. He was also associated with the law schools of Harvard University, New York University, the University of Florida, the College of Europe at Brussels, and the Netherlands Institute of Advanced Study. Professor Cnossen was also consultant to the OECD, European Commission, the IMF, the World Bank, the Harvard Institute for International Development, and the United States Agency for International Development. He has been a regular visitor to India, and at one point of time he interacted closely with Dr. Raja Chilaya and the noted economist Dr. Amrish Bagchi of NIPAP. He spoke to TIOL Tube on India-specific GST issues and made some relevant suggestions for the GST architects in the Ministry of Finance and also the states. So we have Professor Cnossen with us, one of the most noted, perhaps the most erudite GST expert in the world from Netherlands. So Mr. Cnossen, would you like to share your experience with us? You are familiar with this, that India is going to roll out very, very inTAXicating kind of GST model, where we are going for this dual GST, where the central GST and the state GST, and there is going to be a bridge GST which is known as IGST, that is interstate GST. So what do you think, sir, about this?
Well, I'm familiar with it. I've lectured about it at the University of Calcutta and at the Institute of Public Finance and Public Policy. And I've written on the Indian dual GST. It resembles the GST in Canada, so there is a lot to be learned from Canada and from the European Union, from Canada how to do it, and from the European how not to do it. So that is important, and the main points, of course, are that you want the broadest possible base with the fewest possible exemptions, and petroleum products and alcohol and electricity and immovable property should all be in the GST base of the center as well as the states. And of course the states can then impose additional excises if they want more revenue from alcohol, etc. And the excise duty, of course, on tobacco is reserved to the center. Maybe that should be shared with the states, that they also can impose their excise duty. So the broadest possible base and a single rate with the fewest exemptions. And if you want to provide preferential treatment to food products which the government buys to hand out to the poor, impose the GST anyway, but increase the subsidy. So the price does not have to go up for the poor. That would be my advice. And my most worrisome problem about the dual GST in India is the imposition of the integrated GST on transactions between states, so that the exporting state imposes GST, which then is creditable in the importing state, and the importing state has to transfer the revenue back to the exporting state. I think that is really a non-starter, and that is going to hurt business very much, because business will have to pay advance its GST. In the best case, they will lose interest. In the worst case, they may lose the whole tax. And maybe the GST, state GST, should really be confined to every state itself. That is the example of the European Union. It works very well there. We don't have any sort of interstate GST. Canada does not have an integrated GST. It's the federal government in Canada, and the same applies to India, that monitors the transactions between the states. And that's what I would recommend to India as well.
So any suggestion on the credit front? As it is said, the seamless flow of credit happens to be the soul of the GST system. If it succeeds, the GST will succeed.
Yeah.
So any advice you will have for the policy makers, for the GST makers on credit flow? How to capture it, how to match it, what about the manipulation of invoices, for instance? That's going to be the kind of challenge which you look at it.
If it's properly administered, the GST would get rid of all sorts of distortionary taxes in the Indian economy and would add, by its introduction, 1 to 1.5% of gross domestic product to the economy. I mean, it's really a growth promoting and welfare enhancing measure if it's properly introduced, of course. A problem here is again that, of course, the central VAT now, the CEN-VAT, which of course is imposed by the central government, has lots of valuation issues because the goods are valued at some retail value and the credit is given, of course, for inputs, and that's how the VAT should work. But that reflects an excise state of mind, whereas the GST, or the dual GST, should really resemble an income tax kind of audit and administration
and
activity.
The officer should become an audit officer.
Yeah, it should become an auditor rather than an excise. That's correct. Its valuation is not important under a proper GST because it doesn't matter. If goods are undervalued at any stage of production or distribution, you will catch up with them in the next stage of distribution because the credit is much smaller. So there's no issue really with valuation under GST. Try to get rid of that concept that GST is about valuation. It's not. It's about audit.
Right. So apart from that, the preventive aspect of it, the fraud aspect of it, is there any input which you will have or tips perhaps for the policymakers that GST also generates, or probably it can be misused by some of the bad intention?
It can, but it is not very likely that it will lead to greater fraudulent practices than the present GST, with the differentiated rates, with all their exemptions, etc., etc. If you have a broad-based GST that applies to everyone, it is likely to reduce incentives for fraud. And of course, under the dual GST, the GST would show on invoices, and those could be, they can be audited. Now, of course, like any other tax, like the income tax, GST is susceptible to fraud.
Another point, the technology that is being adopted for GST, the invoice will be captured at every stage. So the fraud which is now being created by creating an invoice without the goods, that will not be there in the GST. In support of what you're saying, I'm saying that.
Okay. But I would be reluctant to support the proposal that the government becomes a collector of invoices.
No, it will be there in the system.
Okay, the system will be there.
It will be system. All in the computer system.
Right.
It will no hard copy.
Okay, no.
Okay.
Yeah.
I would like to ask one question, Mr. Cnossen, sir. I know, as I mentioned in the morning in the inaugural session, Mr. Cnossen is my virtual guru. I've been in touch with him through his article and all. I've learned a lot.
Too much honor.
So I would like to ask, I liked your article which you, I think twice you wrote, one in a very elaborate one and one in a abridged version. You had given a proposal about a year back, because there was seamless, the endless negotiations going on between the center and states. So you had suggested that why not you start with central GST and let you use the term, I still remember, let the states piggyback on the central GST and then join the GST whole thing.
That's correct. A little. I would say that the center should take the lead in designing a proper GST which is as broad as possible, which has hardly any exemption, and which has a single rate, probably some 5%, because you want to leave some revenue for the states as well, of course. And then the states can have their own GST, because it's a dual GST, and some states, which are too small to administer their own GST, could piggyback onto the federal GST. And this is what's happening in Canada. Ontario, 3 Atlantic provinces, Prince Edward Island, have piggybacked on, have latched on to the federal VAT, GST, as they call it, to collect the revenue for them by Revenue Canada, which is a federal revenue collection agency.
That's what
But so is it necessary that initially the GST is going to trigger a very high transaction cost for the business, for the taxpayers, and it is also likely to be inflationary?
Unlikely. It's not going to be inflationary if the revenue which you raise through the GST is not higher than the revenue you raise currently through all the other excises plus all the state GSTs, etc., and the SENFAT. That's very unlikely. Of course, you will have some adjustments because the tax on some goods or services may become a little higher, but they will then be lowered on other goods and services.
But GST, of course, is going to widen the tax base.
Yeah.
But the problem will be that a huge number of small taxpayers will come under the GST.
No. Under GST, it's very important to have a very high threshold. And the threshold you should consider is at least, in my view, 80 or 19 lakh. So very high threshold, and you do not lose much revenue that way, because these small businesses will be taxed on their inputs. And since they are not taxable, they cannot take credit for the tax on inputs, so you won't lose.
Centre has proposed for 25 lakhs of annual charge.
Okay. I think that should be at least double. Yeah.
So you are saying in 80 or 90 lakhs? 18, 1-8. No, you say 80 and 90 lakhs.
Yeah, that's right. 80 or 90 lakhs. Under GST in India, 90% of the revenue will be collected from 10% of the firms. So that's where you want to focus your enforcement activities. Those are the firms you want to monitor. You don't want to be bothered with lots of small firms which do not have proper accounts, etc., which are very difficult and time-consuming and labor-intensive to audit. To have a very high exemption, well, you could have $100,000.
So there is some kind of relationship between the threshold limit and also the compliance cost.
Oh, definitely.
If the threshold limit comes down, the compliance cost goes up.
Yeah, definitely.
So that's a
very much so.
India is
and not only that, the compliance costs of a small firm are 30 times higher as a percentage of turnover than the compliance cost of a large firm. And those compliance costs, of course, are also a tax, because the small firm has to pay that, has to come up with the resources to comply with the VAT. So that, again, is a strong argument in favor of a high threshold. And over time, as you get more proficient in administering the GST, you could lower the threshold if you wanted to.
Right. But that will also have an implication for the consumers. If the threshold limits are lower, compliance cost is higher, so it will impact the prices.
No, of course it will, because the small firms, if they have higher compliance costs, they will try to pass them on to the consumers.
Right.
That's true,
so,
yes.
But India presently is heading in that direction, where the threshold limit is very low. A lot of large, small taxpayers are going to be the net. So naturally, it will certainly have some implications.
That's because in the states level, the threshold is only 5 lakhs. Whereas the central level for goods, it is excise duty, it is 1.5 crore, that is 15 million. So that's why via media they have found out that between the central and states are thinking of 25 lakhs. So, but the points raised by Prof.
So 25 lakh, you think that
it's too low? It's much too low.
For disaster
yes,
or something?
I would favor a threshold which would be 3 times higher. Now, look at the current, I got some information about the state VAT in Bengal. There are now 60,000 objections at the court level.
Absolutely.
I mean, and of course, most of these are also raised by small firms, which don't have adequate accounts, and then they are sort of assessed on the presumptive basis, and they don't agree with that, and they go to court. It's a waste of administrative resources.
Thank you, sir. Wonderful, for insightful views on the GST, and let's hope that India joins the global bandwagon of GST.
Well, thank you
very much. And we take more from you.
Thank you for asking very pertinent questions.
Thank you, sir. Pleasure.